Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Aerospace and Defense ETFs is what we're talking about with our ETF Research Director, Nina Mishra, who joins me now. You know, with all that's going on in the world, defense stocks have really been in focus lately.
Yeah, they have been in focus because of rising geopolitical crisis, geopolitical risks in so many parts of the world, especially in the Middle East and Eastern Europe. And in the Middle East, US has escalated its military role. We are now carrying out airstrikes against the militant group called Islamic State.
Yep.
And they are also planning to train and equip rebel groups over there. So what we know as of now that this operation will probably take a long time, may last for a long time, maybe in terms of years, though we do not know about the impact of these measures on the wider conflict in this region. And looking at Eastern Europe, you know that Russia and Ukraine are currently observing a truce, but the situation there is far from settled. And a military flare-up can occur at any time. So it seems that the world is now a more dangerous place, which is unfortunate for most of us, but it is a long-term positive for defense companies.
And that's basically how that all correlates with aerospace and defense ETFs.
Yeah, for all the defense companies, it's a good outlook for them. Another positive for these companies is that many developing countries have been increasing their defense budgets, including India, Brazil, Saudi Arabia, UAE. On the other hand, fiscal austerity in the developed part of the world has led to defense budget cuts in most of the developed countries, including the US, but not Japan. Japan actually increased their defense budgets lately. So this is good for these companies. And in the face of budget cuts in the developed world, they are now trying to focus on research and development, and they are trying to come up with next generation technology products in some of the areas like intelligence and surveillance, which have a huge growth potential. And another point is that commercial aerospace business has been doing very well because of fleet renewals by major airlines and rising demand in developing countries. And last but not the least, this industry has a favorable Zacks industry rank. It's ranked among top 25% of all Zacks industries. So that reflects a positive earnings momentum for companies in this space.
Okay, so you always bring a couple of examples of these ETFs with you. What do you have for us?
So the first one is iShares Aerospace and Defense ETF. The ticker is ITA. It's a market cap weighted ETF. It holds 39 securities in its basket, and top defense companies like Boeing, United Technologies, and Lockheed Martin are among its top holdings. It charges an expense ratio of 43 basis points, and it is a Zacks rank 1 strong buy ETF.
All right, and you have another?
The other one is a Spider Fund. It's called, the ticker is XAR. The slide is not coming up for it.
There we go.
There it is. Okay, so the ticker is XAR, and this is an equal cap weighted ETF. It holds 37 securities in its basket, but all those securities are held in equal weights. So this is a suitable product for someone who doesn't want to take much of company-specific risk. The company-specific risk is very low for this particular ETF because of its diversification. Slightly cheaper. It charges 35 basis points in expenses, and this is also a Zacks rank 1 strong buy ETF.
All right, do you own either of these two?
I don't.
All right, if you're not at Zacks.com, our website, get on over there, check out some other ETF information, articles, educational pieces in the ETF section of Zacks.com, and you can link to that section of the website right off the home page. With Nina, I'm Terry Ruffalo.